Good morning, everybody. Mike Vaki, Princetontrader.com, here for ntmarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart. And what you saw yesterday was the bulls make a new high and then proceed to give up all kinds of ground to the bears. They gave up the 2106 floor. They gave up my proprietary lower level. And then they gave up the weekly pivot at 2103.70. So the loss of all that ground has put the bulls significantly on their heels. Now, that said, the bears have to avoid this becoming what it's been so many other times during the course of this macro uptrend, which is a one-off red day. It's where we get a bunch of green days, we get one red day, everybody gets all excited, the dip buyers come in, and then all of a sudden we find ourselves back at or near the highs. I'm not as convinced of that playing out this time simply because, I've been saying for a long time the 2013 Bears are gone. They have gone over the hill and they're not coming back. The Bears of 2013, 2014, the Bears or the Bulls rather, that created this uptrend, that created this fierce move upward over the past couple of years, never would have allowed us to stay at 2106 resistance for 7 weeks. Never would have given up all the ground that they gave up yesterday. So I remain convinced of my original thesis that this is a two-sided market. The bulls are going to have their moments. The bears are going to have their moments. We're not shifting from a macro uptrend to a macro downtrend market. It doesn't work that way. I know a lot of people that have been bearish for a long time would like it to work that way and will come up with all kinds of central bank collapse excuses to fill in the blanks as to why they think that should happen. But the reality is we're going to shift from a macro uptrend market into more of a two-sided market, and even a two-sided market that continues to make new all-time highs. Let's not forget, we made a new all-time high yesterday morning. So a little bit of a pullback off of that is not unusual from a bullish perspective. It all depends now on what do the bears do with today. Do they continue to push lower? And as we push lower, it's all going to lead up to tomorrow at 2 o'clock where we get the FOMC announcement. And I would be wary of a move that continues to move down from now all the way till tomorrow at 2. Because at that point, it's just too easy for the dip buyers to come in and say, we're gonna buy this and see what we can do with it. That's basically what they did with it last time. So I'll be watching that throughout the course of the day. So bottom line, if you're the bulls, you want to get the weekly pivot back at 2103.70. You want to get 2106 back. If you're the bears, you just want to hold those lines. You've already broken below yesterday's low and Friday's low. You want to go to work on the Thursday low in the 88 area and push down to the middle band. The middle band is open if the bears want it down at 2085.88. So again, ball is completely in the bears' corner. It all depends what do they want to do with it. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.